Hey everybody, today is Wednesday, the 12th of July, and yesterday we had a little bit of indecision with this market. It did make it above the 5-day moving average in the SPY, and with today's gap higher from the CPI, it puts the buyers right back in control and fully no doubt that they are in control based on all time frames, including, of course, that weekly time frame where we are still above all these key moving averages, and then the daily time frame we're riding the rising 20-day moving average. It looked like, the potential was there for a breakdown. That potential was not fulfilled, and news and surprises tend to follow the direction of the trend as they did today. So, a lot of people will be calling for this gap to get filled as this one did. Keep in mind, this one is still open. That's a breakaway gap, and it doesn't have to be filled. It might be a year or 2 years from now before it gets filled. But we will put an anchored volume weighted average price off that and continue to monitor this point forward because it was an important catalyst. I think the important thing about this market right now is that earnings reports are starting up this week, and it's just the beginning. But if the market does see some negative reactions to earnings, the market has a nice cushion underneath it to absorb any losses, so that one or two stocks or a handful of stocks that might get hit hard on earnings, even high profile names, are unlikely to do damage, permanent damage, or lasting damage rather, to the larger markets like the SPY and the NASDAQ. The NASDAQ held above this little key level yesterday and that rising 20-day moving average. And the buyers also, of course, regained control in here. They held on to that control throughout at the end of the day, that is, as it got back above the anchored volume weighted average price. So the market remains innocent till proven guilty. It is fulfilling, what it is supposed to do on the weekly time frame, and even the Russell 2000, which we started getting a little bit more positive on Monday, is continuing its break higher. We have to keep in mind that this market has looked similar in that it was bullish over here with a rising 10, 20, 30, and 40-week moving average, and then that failed early in the year. We've basically avoided it since then. But now we're back above a rising 10, 20, 30, 40-week moving average. And we're in this bigger range, but it just seems like there's a much bigger acceptance of prices at these levels for now. And we are once again back above the anchored volume weighted average price from the all-time high. Now, we've been above there a couple times and it didn't hold. So now we're going to want to see that 187, 188 will become hopefully a new level of support if we start to see some pullback in this Russell 2000. Otherwise, it's starting to look like something we should be taking a lot more seriously going forward to the long side. The semiconductors didn't see any breakdown in here. I discussed a potential pattern for either a breakdown or a rally if it was to pull back a little bit further. But instead, again, the market gapped higher. We're still in an uptrend. We expressed some caution because we were below the 20-day moving average, but that 20-day moving average, the direction was still higher here. What was going to turn me more cautious was a break below here. That didn't happen. So again, buyers are in control. Biotechs are doing right, exactly what they were supposed to. We saw the failed breakdown, and that was confirmed right here where we got long a couple days ago, and now it's right up to where it was supposed to go. Right here at the 20, the 50-day moving average, and the anchored volume weighted average price from this high that we saw in June. Now, it doesn't mean that this market has to slow down in here by any means. But you have to ask yourself, where has it come from? Just from 81 to 85. So that's, about 5% here in a couple days. Not huge, but still it's worth knowing that it's expended some energy. And here's a potential level that supply could be released. We could also look at Fibonacci and say, how much of this most recent decline has it retraced? A little bit more than 38.2%. So it's a potential level of supply. Right now, we don't really, intraday we came right up to it and found some supply there. So if you bought for a trade in here, it's basically obtained that price objective, and I no longer own any of this one. The financial stocks are breaking higher, and this is good ahead of the bank earnings reports. And again, the bank earnings reports are, if they're negatively the response for the stocks is negative, we've got a nice cushion in here that if they get hit, they could still come down into this zone and maybe test that year-to-date anchored volume weighted average price. I still have no interest in trading them, but just as far as the overall market health, I think as long as they hold above 33, 33 and a half, then they're not going to do damage to the market overall. Energy names right up to that 200-day moving average, and they've expended some good energy here the last few days. So just be aware, after a rally from 78.5 to 84.5, that's about 9% or so up to the 200-day moving average. Just be cautious about chasing things like this.